Good afternoon, ladies and gentlemen. My name is Rocky Tong, and I'm the Head of Policy Research at the Financial Services Development Council. Today, we are very glad that you are with us as we are announcing a report entitled Revitalisation of Hong Kong's Real Estate Investment Trust Market. As you will read in our report to be published on our website, real estate investment trusts, also known as REITs, have gained much popularity across the globe over the decades. It is an investment vehicle currently available in more than 40 jurisdictions worldwide, and it has had huge gains in market cap over time. This paper is prepared with the aim of helping Hong Kong to capitalize on its unique competitiveness as Asia's international financial center and bringing prosperity to the local REIT market. As a matter of fact, to boost our competitiveness, the Financial Secretary announced a grant scheme in this year's budget speech, and the SFC, being the administrator of the grant scheme, has announced the start of the application on 10th of May this year. So it was just this past week. These developments are welcomed by the industry, but we wonder what more we can do. So today we have four very distinguished speakers with us, and they are going to share why we are doing this and how we can actually achieve the goal of making our REITs market more competitive. These speakers are Ms. Ding Chen. She's a board member of the FSDC, and she is also the convener of our Mainland Opportunities Committee. In her day job, Ding Zhong is the Chief Executive Officer of CSOP Asset Management Limited. Mr. Andrew Ware, he is also a board member of the FSDC, and he is the convener of our Corporate Governance Committee. He's also a co-leader of the working group, but in his day job, which is more important, he is a senior partner of KPMG Hong Kong, vice chairman of KPMG China, and global chair of asset management and real estate of KPMG International. Mr. Jeremy Ong, he is a working group member of this project, and he is a partner of Baker & McKenzie, where he actually leads the REITs practice here in Hong Kong. Last but not the least, we have our very own Dr. King Au. He's the executive director of the FSDC, and he oversees the daily operation of our council. Today's presentation will be broken down into three major parts. The first part is a presentation to be delivered by Andrew, then followed by a 30-minute panel session that is where Andrew will be joined by three other panelists. And after that, we'll open the floor for a Q&A session. And please do feel free to ask us questions by putting in your questions or comments in the Q&A box. Now, this discussion is going to be conducted primarily in English, but do ask us questions in case that you feel is more comfortable for you to ask in Chinese in the Q&A box. Without further ado, now I'll pass the floor to Andrew, who will walk us through the key of this paper and then also the recommendations that we have set forth. Andrew, please.
Thank you very much, Rocky, and thank you for all you and your colleagues do at FSDC. Thank you for all you do for Hong Kong. The role of the FSDC in helping to promote Hong Kong as an international finance centre and to advise the government and regulators on ways in which competitiveness can be advanced, I think is a really important role. And in that context, I'm absolutely delighted to co-lead the working group on REITs. Why are we doing this? I think there's recognition, as you say, Rocky, that basically globally, REITs have really taken off as an asset class. Hong Kong is an ISC. How can Hong Kong ensure it is highly competitive and its offering is top of class? And there's a sense that we need to reset and reopen the debate on REITs. Hong Kong is a wonderful capital market. It's a wonderful real estate market. How can we make it a wonderful real estate capital market? And so the opening up of the debate and the revitalization of real estate investment trusts is just part of this overall opening up of the capital market and how to get liquidity in there. Why did I just give an overview of the report? And I look forward to the discussion later. If I could just ask my colleagues to put up the slides, please. Thank you. mean, just as a bit of a background, back in 2013, actually, the FSDC did release a research paper on how to develop Hong Kong as a capital formation center for REITs, and sent out some recommendations to develop the REITs market in Hong Kong. I think the government and regulators have worked together well and had a lot of policy enhancements to be well received. But since then, the global REIT market, as you say, Rocky, has really gone apace. I think our friends in Singapore and the development of their market have had a very broad view on how to develop the market. So I think there's many things we need to look at for fresh again. And I think what we're really saying is, let's see how Hong Kong Inc. can remove areas of lack of competitiveness, develop the areas of competitiveness, and raise the bar and the aspiration on what our REIT market can achieve. We can move on, please. Thank you. So really, what is it about? Well, I think in many ways, Hong Kong as an IFC, major global capital market, and that's secure, has to have in its menu a number of offerings for market participants. And there are growth opportunities for REITs, and we need to change a few things. I think probably the first opportunity is how to synergize with existing public initiatives, including, at the moment, REITs are about real estate, but globally they include transportation, infrastructure, and across the GBA, healthcare facilities, even 5G usage. The potential of REITs to be used in connection with real estate, transport and technology related infrastructure is a very important opportunity to consider, and other markets are looking at that. How do we capture regional growth? I think there's two aspects to regional growth. One would be the cross-boundary and cross-border opportunities with, let's say, GBA. But of course, into ASEAN on the back of the ASEAN Hong Kong Free Trade Agreement and the Belt and Road Initiative. And there are other REITs hubs in the region. So capturing regional growth through cross-boundary transactions and deals is another source. How can we make Hong Kong the home capital market for those players in Hong Kong, mainland and elsewhere in the region, that Hong Kong is the natural capital home? I think related to that is Hong Kong has a very large, by some definition, the largest offshore renminbi pool in the world. Within that, there needs to be offering of products in renminbi and also in Hong Kong dollar and US dollar, where people can participate in the market. And the role of REITs in the RMB internationalization by expanding the RMB product base, I think is very, very important. And that positioning of the REIT in the risk framework between bonds and equities as an alternative, particularly for long-term investors, is very, very attractive. So harnessing the offshore renminbi pool, as well as regional opportunities and public initiatives, is key. But you would have noticed there's great momentum regionally on REITs. In fact, there's a lot of momentum on China REITs and the GBA story on property. Strengthening the economic and financial cooperation from the introduction of infrastructure REITs in the mainland and GBA developments is key. And you'll see that some of these REITs are now relating to business parks, physical infrastructure and transport. This shows the direction of travel. So when you hear all of these developments and what's going on around Hong Kong, it does seem very, very timely to revisit the approach and aspiration to what the REIT market in Hong Kong can be. Next slide, please. So we came up with some policy directions, but we also wanted to move quick to say, look, we think in Hong Kong, there needs to be momentum in refreshing and upgrading the REITs proposition. And we've got certain recommendations. Maybe I could just go through them. At the moment, recommendation number 1, refining the REITs value proposition. There are so many REITs worldwide now. Certain markets have developed very quickly. Hong Kong's current market share of those is about 1%. It should be higher when you look at the fact we're an international finance center. However, Hong Kong itself has some real advantages, and we need to refine the value proposition. The following strengths of Hong Kong's REIT regime are very, very clear. welcomes different type of income generating assets to list as REITs, not just real estate. Hong Kong has a very simple and low tax system, no tax on offshore profits, no tax on capital gain, dividends or value added tax. And this automatically flows through to REITs. And the dual tranche, dual counter DTDC model, which allows dual currency trading, is applicable to REITs. If you add those three angles into a strong rule of law, a strong regulatory framework, and Hong Kong's role as an IFC and a capital hub, you can see that refining the REIT's value proposition, refreshing it, and repackaging it is very, very important. Maybe I can move on to a second recommendation now. Next slide, please. So how do we tap into the cross-boundary investor base? We are refining the definition of REITs and what it can be, but how do we tap into it? Well, at the moment, it's perfectly understandable due to the history, REITs are not included as eligible securities under the Stock Connect regime. That actually leaves a very large potential investor base relatively untapped. So we have suggested that REITs as eligible securities, starting probably with the southbound corridor and potentially expanding to the northbound corridor later, should be rolled out after the mainland's infrastructure REITs have been rolled out. This will broaden the investor base of REITs in Hong Kong, but also will be beneficial to the development of the forthcoming mainland infrastructure REITs, and will also give rise to just a general strengthening and broadening of the capital market offering in Hong Kong. The advantage of including REITs under Stock Connect is it can facilitate the efficient matching of real estate assets in Hong Kong, in mainland, with cross-boundary capital. And that in turn will support economic growth and restructuring. And also that will support the role we want of Hong Kong as a regional REITs investment hub or China's offshore capital hub for REITs. If I can move to recommendation 3, please. I think it's recognized that the REITs product offering worldwide has diversified hugely. When you look in the US, Canada, Europe, and Singapore, Japan as well, what REITs do is very different to the early days, which was property holding. There's now hospitality REITs, infrastructure REITs, transport REITs, logistics REITs. And you'll see yesterday the announcement of a logistics REIT in China. So we feel that we need to promote REITs as a vehicle to cover not just real estate assets, but real estate assets in the healthcare, logistics park, business park, and infrastructure sectors. And we suggest the SSC may like to looking at the regulatory implications of such listing, so that there's clarity early on with this regard. And as I mentioned, we've recently welcomed the first listing of the logistics-related REIT, which is a timely example of how the market can be attracted and diversity. And in due course, surely more product innovation based on REIT should be encouraged. REIT ETFs, REIT futures, REIT swaps. We could see really great potential for the REIT market to be revitalized and a bigger foundation and a bigger role it plays in the Hong Kong capital market. Next slide, please. Another recommendation for the FSDC is in the context of tax and financial incentives. And maybe I can put this in context first. Many other regimes offer very clear tax and financial incentives. But I think it's fair to say many other regimes don't have such an easy to follow and simple and attractive tax regime as Hong Kong. However, having such a tax regime in Hong Kong may no longer be enough. And there may need to be a few specific tax and financial incentives so that when asked the question in a competitive discussion of Hong Kong versus other capital markets, there is a more compelling tax and financial incentive story to share with potential investors. So we think consideration should be given to providing some form of tax incentives in areas including the following. And all we're suggesting is, let's have a look at it, let's challenge ourselves and see if there's ways in which we can find ways in which we can make the regime more attractive. Those areas would be property tax on REITs, profits tax on asset holding SPVs, tax on transfer of properties acquired by REITs, and stamp duty on trading REITs. And I think it's worth bearing in mind there has already been very significant progress made in Hong Kong on carried interest and offshore and onshore private equity funds, and carrying on this same philosophy into property funds and REITs, to us, makes a lot of sense. The FSDC was delighted that the government announced providing subsidiaries for qualifying REITs authorized by the SFC and listed in Hong Kong for the coming 3 years. Help with the listing costs of these, I think, is a great statement of intent, and support for the market is well received. And we think that gives a good basis on which further incentives and rebates and opportunities to make Hong Kong more attractive in the tax space can be explored. If I move on to recommendation 5, please. I think there's been a lot of discussion about the regulatory regime relating to REITs. It's currently under the SFC, and I think the recent FSC consultation and conclusion on changes to the REIT code have been well received and have been acted on quickly. A couple of points, though, have been raised by people in the industry. One is takeover and mergers are common ways globally for REITs to grow their businesses. Good examples would be Singapore, US, Japan. However, in Hong Kong, the way the rules are, such restructuring of REITs suffer from 2 regulatory difficulties. And in fairness, these are regulatory matters brought in for good reasons, but the practical ramifications of them probably need to be reviewed. And as namely the absence of what's called a squeeze-out provision facilitating the takeover of REIT, and the non-availability of a scheme of arrangement in the privatization of a REIT. This is in contrast to listed stock. And we suggest let's have a look at legislative changes to consider the facilitation of compulsory acquisition and scheme of arrangement for REITs, basically extending their application to listed collective investment schemes. And the SSC should consider a practice note on their application to ensure minority unit holders of REITs are accorded the same level of protection as shareholders in listed companies. How to get a fair and level field between REITs and stock exchange listed securities. The FSDC and working group gladly notes that the SSC's consultation conclusions on the code acknowledges these issues, and are very pleased that the SSC says it's consulting the government on the next step regarding these suggestions. And we're very grateful for this to be looked at expeditiously. If I could just move on to the last recommendation, which really is about market promotion and regulatory communication. I think it's very clear. We in Hong Kong need to demonstrate as a market that we're having a fresh look at real estate investment trusts, and that REITs, different types of REITs, are welcome, and there is a facilitative policy, promotion, and regulatory regime. In terms of international market promotion, we're going to have a REITs Day, various dedicated REITs events, and we're going to step up the regional and international promotion of REITs to establish Hong Kong as a go-to market. Remember, what we're trying to achieve is the close proximity to mainland and the expertise in real estate, and Hong Kong as an IFC, putting those two together to say, have a fresh look at Hong Kong as your home capital market for real estate. We're looking at targeted marketing by investor type, tailored means to engage with institutional investors and retail investors, and a swift and transparent regulatory communication. The setup of the designated hotline and inquiry email by the SSC is well appreciated, and timelines on the processing time for application approvals, which is a key consideration factor, would be highly welcomed as well. So really, just to wrap up, what we really want to do is reopen the debate and reopen the aspiration that Hong Kong as an international finance center needs to have a stronger and more compelling REIT regime, which will come from support from the government and the regulators, the FSDC and the profession. And maybe I could just summarize on a couple of points. Hong Kong still has unique features. As I said before, IFC, rule of law, GBA, unique connectivity with mainland. And keeping pace with the rapidly evolving global capital landscape. A combination of these two things is key to bringing prosperity to Hong Kong and having a strong REIT market. But whilst this paper focuses mainly on real estate investment trusts, I have to say there's been a number of positive developments in the stock exchange in recent years and on investment funds and private equity funds recently. And it's noted that Hong Kong has a number of listed companies and property management companies have been IPO'd recently. So this is a very attractive capital market for real estate, particularly mainland real estate, where in many ways Hong Kong is seen as the first overseas capital market to explore. And so this is hugely important that we make a step change in the attractiveness of real estate investment trusts. So the FSDC hopes that the recommendations set forth in this paper can help challenge ourselves to reopen the debate and nurture an ecosystem for real estate financing, which is fit for purpose as we move into the new normal. And as always, the FSDC looks forward to working very closely with various stakeholders to cement Hong Kong's position as an international financial center. And in order to do that, I think the FSDC recognizes that we cannot stand still and we need to challenge ourselves and bring new ideas to the table on how Hong Kong can do better. And that is the background to our paper today. Thank you very much.
Thank you very much, Andrew, for a very detailed and thorough elaboration of our recommendations and the background of our research. And now let's jump to the next part of this session, and that is the panel session. Now that I can see all of the panelists are here, I'm going to first throw a question to Dr. King Au. King, as the Executive Director, can you perhaps explain to us why we are doing why we are launching this report, after publishing a paper back in 2013 and having seen that there have been quite a few developments on the regulatory front already?
Thank you. First of all, I want to thank Ding Zhou, Andrew, Jeremy, and other working group members for preparing this very concise and timely paper. So to answer your question, Rocky, can you bring up the slide? I think slide 13. Yeah, this is the roadmap for REITs in Hong Kong, you could say. As Andrew mentioned, it was first introduced back in 2003. And then for the past, say, 17 years until last year, we had two major milestones. Apart from that, nothing much happened. And that partly was the reason why FSDC put forward a paper back in 2013. And I'm glad to report back that some of our recommendations have been taken on board by the regulators and the government. Now, what is interesting is to look at the past 12 months, right? Started with MPF relaxing the guideline on REITs investment, and then the introduction of REITs ETF and so on. And lately, the government introduced this incentive scheme for REITs to be launched in Hong Kong. And then, as we all know now, yesterday we had the first logistic REITs, and then there will be more to come. Now, this is really the question, why? If I may ask you to bring up another slide, please. Now, if you look at the REITs market globally, right now the combined market cap is about $2 trillion. And you can see US, being the largest capital market in the world, has a very mature REITs market, almost 60%, in fact, more than 60% of the world REITs instruments. But Hong Kong, at the moment, is only 1%. So Where's the potential? So can you bring up another slide? Yeah. Now you can see, comparing Hong Kong to our peers, our friendly competitors in the region, you can see that we are lagging way behind. And therefore, based on what Andrew said earlier, and I'm sure other panel speakers will expand on that, that is the potential for Hong Kong being the super connector between China and the rest of the world. As alluded to earlier, China is now also developing the REITs market, focusing initially on infrastructure REITs. And you can see the reason why Hong Kong, being an international fundraising platform for a lot of Chinese companies already, is a natural development for Hong Kong to develop the REITs market, to embrace this global trend. So back to you now, Rocky.
Thank you very much, King. I thought that was very clear, and I hope the audience found it very clear too. Now, I would like to direct a question to Jeremy. King has answered, provided us with an answer and explanation of why we are doing this. Perhaps you can share your insights on why people would like to choose Hong Kong. So in this regard, given your legal background, I would like to see from a regulatory perspective, what are some kind of advantages of Hong Kong REIT regime compared to those of the other jurisdictions?
Thanks, Rocky. I'll just be brief and mention two reasons. There's more, obviously. The first one to me is, as King mentioned, the Hong Kong REIT regime's been around for about 17 years, and we have some very experienced regulators here in Hong Kong that specifically deal with REITs at the SFC. So in my personal experience, they are very friendly and encouraging of new REIT applicants, and their familiarity with REITs, in particular what makes them a little bit different to listed companies, or in other ways, they're very similar to listed companies, really helps smooth the IPO process along. They also, these regulators, they deal a lot with PRC real estate. So they have some familiarity specifically with PRC real estate, how the title system works. So to the extent there's any non-conforming issues or other things like that, SFC is happy to have discussions to see whether this is still an eligible property to be injected into a Hong Kong REIT. So we have very experienced regulators here that are very friendly. As we mentioned and Andrew mentioned in recommendation 1 and 6, some repositioning of the REIT value proposition, ongoing dialogue and market outreach could help make this more widely known to the market as well. So that's the first thing I think that's Hong Kong's advantage and how that can be further enhanced. The second is, naturally, Hong Kong is proximity to China and integration with the GBA, as Andrew mentioned before as well. Singapore, they may have a larger REIT market. They have made really significant inroads into attracting foreign sponsors from the US, UK, Australia, other jurisdictions to list their portfolios in Singapore. But for Hong Kong, I mean, there's still a lot of PRC-based sponsors that would prefer to list in Hong Kong. I mean, due to a number of factors that could include an existing presence in Hong Kong, geographical proximity, Hong Kong investors' familiarity with investing into PRC-based companies and IPOs, policy considerations, particularly for SOEs where it might be hard for them to go elsewhere. So, having said that, there's, even though we are, close in proximity to the PRC, there's still some scope to achieve further integration by allowing cross-border trading of Hong Kong REITs and Chinese REITs over Stock Connect, and encouraging dual currency REITs. My fellow panelists will go into further details, but if we allow this cross-border trading between the two REIT regimes and investors in both jurisdictions, this will benefit the REIT market by adding additional liquidity first, and also providing a differentiator from other jurisdictions like Singapore that would make Hong Kong and also the China REIT regimes more internationally competitive.
Thank you. Thank you very much. Your highlight is very important. The friendliness and experience of our regulators, as well as their understanding of the Chinese market, as well as our geographical proximity to these issues. So thank you very much, Jeremy. The next question I would like to address it. Ding Zhong, can you get ready for this question? I would like to, since you are our Chinese expert, right? Like our China expert, really. You are the convener of our Mainland Opportunities Committee, and I would like to ask you a question in relation to the recent introduction of pilots rules for mainland infrastructure REITs. So it was something that was mentioned a moment ago by both Andrew, King, and Jeremy. So, I think, it would be good if you can tell us a little bit about what you see as the challenges and opportunities that these mainland Chinese infrastructure REITs would pose to Hong Kong.
Okay, thanks, Rocky. And obviously last year, April last year, we see CSRC and the National Development and Reform Commission, they jointly issue a circular to promote a pilot program of infrastructure REITs in mainland China. And at that time, obviously, it's a great news for asset managers and also for the industry participants. And I heard from mainland China, people say this is another game-changing opportunities for the industry participants. And the people are all talking about in next 3 to 5 years, that REITs market in China will be like above 1 trillion and etc. So obviously, people are very, very, keen to that. And recently, we heard from news that CSRC just give green lines for 5 REITs listed in Shanghai, and 4 were listed in Shenzhen. And obviously, this is a great news for China. And what's the challenging and benefit for Hong Kong? I think definitely it will have bring more business to Hong Kong as well. So if you look at detail about this time mainland China's pilot program, it's mentioned a lot about new infrastructures. And the efficiency and quality of China's infrastructure constructions have always attract attention from global investors. And recently, the REITs run in mainland China, they are all like a new infrastructure, and we interpret the new infrastructure to something we are easily to understand is they are all pretty much ESG related projects. So, right now, global major economy, we are all in the zero or negative interest rate environment. So yield is very, very treasure for investors. So for us, for institutional investors, we always use REITs as a tool to boost our yield. And like China right now is pretty much only the major economy can provide positive returns. So I think because of Hong Kong's unique situation with mainland China, we're 1 country and 2 systems, we probably can bring more money into Hong Kong, either by investing in some China related REITs in Hong Kong, or Andrew mentioned something about connect in the future. If we have some opportunity to connect to mainland China's REITs market, I think it's also a very, very good business opportunities for Hong Kong. Thanks.
Thank you. Thank you very much, Ding Zhong. I thought that it was very clear. And not only is the negative or zero interest rate environment be a contributor to the attractiveness of REITs, but also, the wide spectrum of investment opportunities that will bring about, interest too. Andrew, I would like to go back to you. Thank you very much for the early presentation. Now, I would like to ask you, in your capacity as a board member of APREA, I know both you and Jeremy are on the board of APREA, which is the leading regional industry body for real estate investments here in Asia. I would like to see how you actually would like to take on the future development of real estate in Asia, not only in mainland China, but in Asia in general. And do you think that Hong Kong has a role to play? And if so, what role will it be?
Thanks, Rocky. I'd just like to call out the great support from APREA and a number of senior APREA members in the working group. And Ada, who chairs APREA, Ada Wong, does a wonderful job with a number of other people in positioning REITs. So that I just wanted to mention that. Thank you. The way I see this in Asia, Rocky, big picture from a investment allocation model viewpoint, real estate is still relatively underweight in institutional investor allocation, and Asia Pacific is still relatively underweight. Then you throw into the mix a relative shortage of investable supply of real estate and the development and urbanization story in Hong Kong, in mainland and the rest of Asia. The potential for the real estate market and the real estate capital market is huge. And this is why there needs to be a reset of Hong Kong's aptitude and attitude towards real estate investment trusts and other means by which people can participate in real estate investment. Hong Kong, as I said in my presentation, has remarkable real estate know-how and knowledge, has remarkable IFC capability, but the pulling those two together in a framework that becomes an obvious capital market of choice for real estate is what we're trying to achieve here.
Thank you. Thanks so much, Andrew. Loud and clear, Hong Kong's reset of Hong Kong's aptitude and attitude on real estate investment. So I would like to move forward. I know that we only have 20 minutes left for this session. I have I would like to. We have a set of questions preset, but then we have also received quite a few numbers of questions from the audience. So if I may, I'll just ask two more questions from the prepared list and then jump to the Q&A session right after. In fact, Ding Zhong, I would like to ask you about this. What are some of the benefits for access in the Greater Bay Area to this in Hong Kong as REITs? There are a lot of projects, infrastructure projects going on at the Greater Bay Area. Do you see that there could be potentials for them to list here in Hong Kong?
Yeah, definitely. So I think, for REITs, obviously, I just mentioned, like in China, we are still in the infant stage. For institutional investors, they have to grow their habits to invest in REITs. But globally speaking, REITs, it's a very mature asset class. You just mentioned, if I may quote the numbers from the report, it's like by May of this year, the global REITs market is already above $2 trillion US dollars. So it's a big market, and institutional investors and retail investors all knows how to use REITs to diversify their portfolios. So I think if some of the Chinese REITs can list it in Hong Kong, definitely they can diversify their investors to get more, to get access to global investors. And most of the global investors, especially institutional investors, tend to more long-term and very sticky money. So I think it's a good benefit for them. And also I want to mention is, as a fund manager point of view, people are all talking about whether inflation is coming back. And we see, during the inflation period of time, REITs, because of its property appreciation nature, and the REITs asset class tend to perform better than other classes. So I think it's a golden period time for Hong Kong. We can, attract more REITs in mainland China to list here. And also I think, the ESG angle is also a very good angle to attract global monies.
Thank you. Thank you so much, Ding Zhong. If I may, I would like to first refer to the questions we have received from the audience. Then if time allows, I'll go back to some other very prepared questions toward the end. This is from Dorothy from Minpao. There has been criticism that the recently launched SFC grants, which will cover the listing expenses of newly listed REITs, is too generous, or in other words, is using taxpayers' money to subsidize property tycoons. What's FSDC response to the criticism? King, I think it's a question for you.
Sure. Yeah. I think we have to look at it from a more holistic perspective. It's not property tycoons that we are subsidizing. We are actually subsidizing the market development. We want to encourage investors to come to Hong Kong for listing. We have done this very successfully in the past. I would like to quote the Unified Fund Exemption Code. When it was introduced, there were a lot of comments from the market saying that, oh, why are we giving tax away, incentive away to fund managers, to private equity firms. But look at what we have got in return. We're now the second largest private equity hub in Asia after China, right? So lately, the government has introduced various incentives to encourage more foreign participation in Hong Kong's financial market. So I think this is the way we should look at it. Jeremy will know better than I do. It may sound quite a big number, up to $8 million, but listing can be an expensive exercise. I'm sure Andrew and Jeremy have done a lot of those. So I don't know whether the two gentlemen have anything to comment on that.
King, yes, I agree. Actually, I want to talk about international competitiveness, and also I can touch upon one of the questions asked by YL Ding as well about Hong Kong versus Singapore more broadly. It really is a higher degree of competition right now because every city and their relevant stock exchange is trying to bring in or lure to fish the sponsor to come list in their jurisdiction, just like any other kind of IPO. Because there's a lot of benefits from them listing in the jurisdiction. It creates employment, generates business, brings in professional service providers into Hong Kong, and there's, I guess, longer term taxation revenue too. But to do that, it really is a competition. So say there's a sponsor which has US assets, they can choose to list in Singapore, Hong Kong, even the US, and then they only will select one. So the reason why I think the FSDC is proposing a lot of these recommendations is to try and make Hong Kong look relatively more attractive, and the same goes with the subsidy. In terms, and the flip side of that is actually in Hong Kong, there's no restrictions on what asset classes or even geographies can be listed, can be any geography, any asset class. To date, Hong Kong has just really got commercial, hospitality, retail, and now logistics, fortunately. But compared to that in Singapore, they have a lot of other alternative asset classes as well. The key that, with our proposal, we'd like to build some critical mass in other asset classes, focusing on Hong Kong's, strengths that I mentioned earlier. And once you build that critical mass and you build that sort of ecosystem and build the sector up, then it becomes easier to attract other sponsors to come list here. Also, we need to have a diverse REIT market with lots of asset classes for it to be resilient to things like COVID, because obviously the performance of a REIT during COVID depends on the underlying asset class. So if you have all commercial retail REITs, they're all got to be impacted the same, especially if they all invest in the same cities. But if you have other asset classes like logistics or healthcare or other things, there might be some option for investors to switch up their portfolio, and that'll make the Hong Kong REIT market more resilient.
King, maybe I could just add, I agree with the analysis. Just to put the questioner's mind at rest, I don't think there's any consideration of the point you raised. I understand your question, but there wasn't a consideration of that because what we're trying to do is, as King and Jeremy said, is develop the market. I think there's huge employment potential on this, but above all, it was to deliver a signal that REITs are now seen as something which the authorities, including the government, are rallying around as part of this reset. And it's a positive development of the capital market, and it's a signal. And Jeremy's dead right. When you're in a competitive world, if your competitors are coming up with incentives, tax breaks, etc., however good your own regime is, unless you continue to put new ideas out there to showcase the attractiveness, it becomes hard. So I'd like to see it in that context as well. I don't think for a second we thought of it as subsidizing tycoons, but I respect the question, but I think our answer is quite clear.
Thank you very much, gentlemen, for your answers to this question. Next, we have quite a few questions from the audience. Can I ask, in fact, this is a question in Cantonese, so I guess King will be the respondent in this regard. 喺2020年嘅施政報告提到促進發展房託基金，其後2021-22年嘅財政預算案咧宣布為房託基金提供資助。請問預計今年在港成立的房託基金有沒有增加？
咁我諗呢個問題，首先就市場已經答咗啦。我哋琴日有一個新嘅，咁應該今日咧睇報紙都會見到有另外一間咧係會上嚟香港嘅。咁我都想回應翻頭先 Jeremy 提到啦，同埋 Andrew 都有講過喺 presentation 就係我哋希望發展呢個房地產信託市場咧，唔係淨係做某一類型嘅房地產，而係我哋係希望可以做多唔同類型嘅，例如好似呢個新興嘅行業啊，好似嗰啲 data centre 啦，即係儲數據㗎啦，醫療㗎啦，同埋係基建㗎啦，呢一方面呢啲我哋相信咧，遲啲咧會希望可以吸引到更加多呢類型嘅信託基金房地產信託基金嚟香港嘅。咁至於你話有幾多咧？我而家就冇呢啲咁嘅數據，但係我哋係好樂意見到啦，喺咁短嘅時間咧，應該即係已經有一間上咗，另外有一間係而家嚟緊嘅。
多謝晒 King. Thank you very much. In fact, like there is another question that is very similar. So if I may, I would like to ask that question in English. And so, like perhaps Jeremy, Andrew, Ding Zhong, you guys can chip in and see, like if you have anything to add in relation to REITs, the prospects of REITs coming to get listed here in Hong Kong. So we now see that, there are subsidy schemes. And then, like the audience would like to see if you have a sense of how these REIT listings are going to be in the coming year or so.
Sorry, Rocky, I couldn't pick up the last part of your question.
So, like, do you see that there's a pickup in terms of the numbers of REITs coming to Hong Kong?
Yeah, I would say, look, you've got what is a REIT? In many ways, it's an exit mechanism for unlisted funds. It's an exit mechanism and a diversification tool for property holders. And it's also a new product for people to participate in real estate in a unitized way. Just look at the number of property IPOs that have been and property management IPOs that have been in the last year. I think if we can revitalize the REIT market, Hong Kong as an exit mechanism for private equity, for unlisted funds, and for rationalization of property groups, there's a significant demand already here. And what is just needed is the signal that Hong Kong as a capital market is ready as the home market to provide an opportunity for such product to come to market. So I'm confident there's a ready market. It's not like creating demand. I think the need is there. and the demand is there.
Fantastic, thank you.
I think if you look at like other developments in the market now, like the C-REIT regime, there's a batch of 9 C-REITs which just got listing approval, should come out soon. You know, that just shows that there's a general trend towards adopting asset-light models and asset management models, as opposed to maybe a more inefficient model of holding the real estate, even though it's your non-core business. You could actually dispose of it, retain control, lease it back, and use the money for your core business, right? So there's a general trend, you know, that's already happening, as Andrew said. So that's why it's so key for these recommendations to be adopted now, so that we don't miss in the trend. So I think even without the recommendations, we probably would have seen more REITs. But the idea is we're trying to make the environment as hospitable as possible to ride on this trend. Yeah.
I want to echo what Jeremy just said. In fact, REITs is just another kind of asset-backed securities. So, you know, recycling capital is very important, especially, you know, we can extend this fundraising platform to buy and roll projects, because there have been a lot of projects that are now maturing, right? Especially, actually, I read somewhere, you know, during the COVID-19, the railway link between China and Europe actually helped deliver a lot of protective gears to, you know, developing markets along the route. So these are assets that can be listed as REITs. So, you know, the concept itself is very versatile. So I saw a question that, you know, whether it's just tailored for China. It's not. Actually, going back to what I said, it's asset-backed securitization. So any assets that generate steady income can be repackaged as a REIT and have the capital recycled for other investments, like Jeremy said.
Fantastic. Thank you very much. Ding Zhong, do you have something to add?
Yeah.
Otherwise, okay.
Yes, Rocky, thanks. I totally agree with my colleagues' comments. So I just a little bit add in. So obviously, there's no doubt REITs is a mature asset class globally, and with the size, with the investors, and obviously REITs has a very important, you know, benefit or functions in construct portfolios. So whether Hong Kong will attract more REITs to list here, I think we need to the whole industry and the participants, we need to do a better job to create a more healthy ecosystem, like governments try to you know, promote REITs, and also, you know, the industry participants can provide more you know, liquidity to the market and attract more money to here. And we see demands are there, and also obviously in Mainland China recently is promoting the new infrastructure REITs in Mainland China, and that will nurture a bunch of you know, institutional investors. I think in the future those institutional investors can, you know, through either connections or either connect schemes or other ways to invest in Hong Kong, you know, REITs market. So we hope Hong Kong, you know, can attract both issuers and also investors here.
Thank you. Thanks very much, Ding Zhong. I have another question to be asked in Cantonese. So, the King, please be prepared to answer. 有一條問題咧喺度問你係而家咧香港嘅房託基金最大嘅問題同埋挑戰到底係啲咩嘢啦？呢個第一。第二個咧就係有關於房託基金嘅發展空間到底有幾大？咁同埋咧就講到喺我哋嘅報告裏面咧係講咗係話希望可以房託基金納入股市嘅互聯互通計劃裏面嘅。咁呢一樣嘢我哋有冇同政府去傾咗啦？或者有冇同內地嘅相關部門已經係溝通過啦？對方嘅反應係點樣咁樣？咁我覺得係可以順住呢個次序去真係作答。
呢個問題可能都好長，咁我嘗試簡單咁答啦。咁呢個香港呢個 REITs 個 market 個挑戰咧，其實頭先Andrew 喺我哋講嘅時候已經講咗，我哋商政府再做多咩啦？咁就係呢啲其中有啲稅務啊，或者係呢啲條例上面嘅限制咯。咁另外一樣咧就係對我哋覺得香港嘅投資者咧，其實對呢一個房託嘅概念咧唔係認識好多嘅啫。咁所以好多時咧就 覺得就一定淨係商鋪啊，再唔係就係商場啊，或者係呢個商業樓宇啊。但係頭先我都講咗，有好多唔同類型嘅產業咧，可以打包成一個房託基金嘅。咁所以呢個機會咧係相當之大嘅。咁或者我舉個例啦，去第19頁啊嗰個 slide 唔該，可唔可以show 一 show？ 咁亦都答到個問題，就係話個機會有幾大啦。亦都答到頭先有一個問題，就係之前有一個問題，就係香港應該嗰個房託基金嗰個發展空間個有幾大啦。嗱，如果你睇佢係美國房託基金個市場2015年到2021年嘅改變，你可以見到啦。頭先我講有啲咩新興嘅行業啦，譬如好似 data center 好似數據中心啦，由以前嘅4%去到而家嘅市場差唔多10%啦。咁另外一個咧增長得好快嘅咧就係基建啦，infrastructure 以前係8%嘅，而家去到17%。咁呢正正就係帶出咗頭先我哋講香港點解要做好呢個房託基金個整個系統，就係可以發展呢啲機會啦。內地有呢啲機會啦。海外市場都有好多呢啲機會，點解要嚟香港？頭先 Jeremy 都講咗，有啲去咗新加坡。但係你諗下，香港就係因為正正有 Stock Connect，有呢個中國市場，包債券同埋股票嘅市場嘅吸引，令到我哋個資金流通量係全亞洲係第一嘅。咁點解我哋唔去利用呢一個資金流通量去吸引多啲唔同類型嘅投資咧？咁所以呢一個房託基金嘅發展對我哋嚟講，點解係咁重要？我希望我好簡單答晒所有問題。
Thank you. Dr. King, thank you very much. I'm still receiving quite a few questions, but I would like to, bundle them together and see if we can address them in the next few minutes. We are really approaching 5 o'clock. So there are questions about Hong Kong's attractiveness as a listing venue for REITs, not only based in mainland China, but also the rest of the world, say Southeast Asia. So do you see that there's a trend, or how we can boost our competitiveness to attract or to lure these REITs to be listed here in Hong Kong? Questions for anyone? Jeremy.
Sure. I'll try my best. So I think there's some natural competitiveness in the sense that while Singapore has more foreign REITs, there's also consolidation in Singapore now with mergers of REITs, because there are, frankly, a lot of REITs. In Hong Kong, there's potential for someone to have the first, US property portfolio REIT, European property portfolio REIT. These territories are yet unclaimed. So I think that, as opposed to going into a market where there are already several, so that there's definitely, I think, room for foreign sponsors to consider Hong Kong. Also, not just foreign sponsors, but even, Hong Kong sponsors that hold property overseas could really think about, since they're familiar with the listing rules, listing a REIT in Hong Kong. There are recent changes to the REIT code to align the REIT regime with the listed company regime. So to the extent there's any Hong Kong listed companies or Hong Kong based sponsors that want to list their overseas portfolio, this would be probably the most natural jurisdiction to do so.
I just add to that, Jeremy, the sheer scale of asset sizes, portfolios, the mainland China story. If one gets this right, and I'm sure Hong Kong will, the scale of that can be much, much greater.
I think that brings us to the final question, and that is to see if you guys have any other additional points to make before we close this. Perhaps I will start with Andrew, then King, and Jeremy, and Ding Zhong.
All I'd say is the time is now right. So many moving parts globally, nationally, and in Hong Kong. The time is right to upgrade our aspiration of what the REIT market could look like and make sure we have a competitive advantage in this space. And all the points all my colleagues have raised are very, very valid. And with the right, I said, aspiration, attitude, and aptitude from the whole of Hong Kong Inc., we can transform the REIT story in Hong Kong. And I hope in 5 years' time, we look back at this as being a watershed moment where that call to arms to have a reset turned out to be a very wise decision.
Yes. I just want to highlight one more opportunity for Hong Kong. That is the 2060 carbon neutral target of China. Based on some estimates, China has to invest $16 trillion just to restructure the economy to meet this target. And 75% of that has to come from the private sector. So a lot of these large infrastructure, power, utility projects can be repackaged as a REITs. So another opportunity for Hong Kong.
Well, I agree with King on the large scale stuff, but I also am actually personally interested in the small scale stuff too. That was a question about ESG REITs, you know, in things like, you know, nursing homes, you know, housing, you know, and you know, healthcare, hospitals. You know, there are needs for this as a result of COVID, and actually, REITs help people recycle capital. They can basically dispose of the asset, lease it back, use the capital to build a national network of these kind of assets. So I would actually, especially with the subsidy, like to see some smaller scale REITs also being listed that actually can contribute to you know, day-to-day life of people in Hong Kong.
Right. Yeah, I agree with you know, your comments. So definitely, you know, REITs is big opportunities over there. And I saw people, a journalist ask a question about ETF. So right now in Hong Kong, we don't have a ETF, you know, a REITs ETF yet. I think as long as the REITs market is going on, definitely they will have like ETF on REITs to provide to investors. And also, I want to, you know, use this opportunity to say to everyone is, watch the inflations. If inflation comes back, you know, you better to have REITs on your portfolio. Thanks.
You're on mute, Rocky.
Sorry, sorry. No, like I was just saying that thank you very much, everyone, for your participation. We have a very good mix of panelists with tax experts, legal experts, asset managers, and policy, you know, advocates. So hopefully the audience have enjoyed the conversation as much as I did and learned as much as I did. I did not get to, you know, like throw all the questions to the panelists, but in the case that you feel it is comfortable and appropriate, please do reach out to us, and then we'll try to answer your questions accordingly. So thank you once again for joining us, and please do read our report, and it's available on our website.
Thank you.
Thank you. Thanks.
Thank you.